Hey everyone, it's Stephen at Total Market Traders, and today we're looking at a stock. Now this stock we're looking at is Amazon. So the ticker symbol for it, as you can see just here, is AMZN or AMZN, depending on where you're from. And the reason we're looking at it right now is because they've just released their earnings report. And if I make this a little bigger, give me a second, we can see these grey sections, and then the black. Black is from the actual market open. The grey sections are pre-market, and this bit is aftermarket. Now, as you can see here on the news section, Amazon revenue surged 38.2% over the holiday period. So that's pretty much, it's pretty obvious as to what that means. It's over the Christmas period, and if that hadn't been the case, say they're, I don't know, what, 8.2%. That wouldn't have been so good. So you may have seen actually the opposite, especially after a massive run up like this. And this is the reason you don't trade or don't try to day trade or whatever the day before earnings, because you've no idea as to what way this is going to go. If you try and short this, you're going to get squeezed very fast. There's a lot of volatility here. As you can see, price closed here, went down very quickly within 1 minute and shot up to here. So that's what, 1,384 all the way up to 144. Now that's not a huge dollar amount, but in volume wise, that's 60, 100,000 shares, so it's quite a few million going through, and that's something you can't predict because you don't know the insider information, and no one should actually. So unless you're insider trading, you won't know what the results are going to be. And so that's why it's a gamble as to why, as to what the results are going to be, because you've no clue until they actually get released to the public. And whenever that happens, that's exactly why you see sudden volatility like this. You get a spike in one direction, a quick pullback, and then that's when day traders or whatever start to come in, and they can trade that. Even that's a little bit more, it's not as risky, but I wouldn't personally try and trade this as such. I have done in the past, but not today. I'm not doing it. You can trade this post-market if your broker allows it. Is it worth it? Not really, usually. Unless that fits your style, it's up to yourself. But basically, just to wrap this up quickly, this is stuff we go over in our video lesson library. If you want to take a better look at it, feel free to check that out. But this was just basically to go over what it is and just to show you a stock as to why you don't trade earnings and try and avoid them as much as possible. Just remember, these things happen 4 times per year, so it's every quarter, every 3 months, and the reason they do that is just to publicly release their financials as to how they're doing, etc., for investor purposes, and sort of go from there. So hopefully you've learnt a little bit from this, and any questions or anything, obviously feel free to send us a message and we'll get back to you as soon as possible. Have a great day, and thanks very much.